Hope everyone's doing well. Welcome back to another video. So today's video is a continuation of the previous mini lesson where I showed you guys how I will be journaling using Notion, and I gave you guys a template. Of course, I didn't tell you have to use the exact template. You can change things around, but I just gave you guys what I personally think you should be putting on there. So now this is going to be a similar video, but this time we're going to talk about data collection and backtesting, right? So let's start with the very basics. Now let's think back a few lessons, right? We done a weekly profile lesson, we done a daily profile lesson, we've done an ADR lesson, right? These are 3 big data points. With these data points, there's a lot of things to collect, right? The ADR, very simplistic one. How many pips do we move in a day? Using the previous 5 days, we build a 5 ADR, take on to the next day. Cool. We can then, collect that data for an extended period of time and start to build an average amount of pips that price will move, right? So cool. The weekly profile, fairly easy, bullish, bearish week. What day is price making the high, low? Same thing with the daily profile. Fairly straightforward, right? When is price making the high, low? And of course the ADR is already accounted for. Now, cool. That's all nice to backtest. It's a good test, especially for some of you who might be beginners. To visualize data, to bring it together, and just something that a lot of people should do. Not only to see the data and the results, but get to grips with the chart, see how price is forming, what happened in the past, and where price has actually come from. Because if someone starts trading EU today, they haven't looked at the charts from 6-7 months ago. I'm not saying it's necessary, but it won't hurt you to go back there, backtest a few things, get to grips with it. Now, let's get to what's actually in front of us right now, right? So I've made this spreadsheet. Now, you guys are welcome. First of all, you have a bunch of data that's already been, collected for you, and you can of course copy, right? But let's get into what it is. Pretty straightforward. Month, what day it is, right? This is gonna matter. The date, of course, of the month, the daily range, the daily close, was it a bullish or bearish day? TOH is time of high, right? What time was the high of the day put in? I've been calculating to the minute, right? So this is an issue that people experience when they backtest. You can't go back on the 1 minute time frame very far, right? You can only go back for a certain period of time, certain amount of candles. Now, we don't have to be pinpoint. I could have used a 5-minute chart, whatever. But when it's available, why not, right? All of you watching this video, if you watch this video as it comes out, you should be able to go back on the 1 minute chart all the way back to the start of the year, the first trading day, which was January the 2nd, the Monday. And you should be able to see on the 1 minute chart on EU specific when the high of the day and the low of the day was put in. And likely it will be the same on DXY, of course. This is the session of the high. This is the session of the low. This is the daily range time. So what do I mean by that? The daily range was what? 49.9 pips. How long did it take us to go from high to low? 16 hours, 45 minutes. What was the daily profile? This one, you may have some questions about expansion, consolidated expansion, reversal, right? How did I come to these conclusions? Well, this is why we have the next box, the weekly close. Let the week close, right? On the weekend, which is when I would recommend you guys to do this, go back to, the previous week that's passed. If your week has closed bullish, what would these days mean, right? So this week closed bearish. So if Monday was a bearish day, Tuesday was a bearish day, and your week's closing bearish, what does that mean? Expansion, right? Consolidated, because this pretty much just went sideways, went back into the range a bit, expansion again, and then Friday offered a large reversal due to NFP, right? So these answers were calculated on the basis of how the week closed, and of course going back on the charts and looking at it, from perhaps a 15-minute time frame, and it's very easy to see what each day done if you split them up. Cool. Over here I've made a little section for comments. For example, already this day is an outlier, 166 pips. Okay, this day as well, right? But let me add that Monday was a bank holiday. So typically the day after the bank holiday, we expect this day to deliver the liquidity of this day and the previous day, right? Makes sense? So now when I look at my data and I'm like, okay, wait, why is this a bit of an anomaly? Makes sense. The previous day is a bank holiday, so we've delivered the liquidity of the previous day and the current day. Now, this day again, why is this a bit of an anomaly? 166 pips. I've written, it's NFP, right? It was a reversal back into the weekly range. Just so I'm aware when I do have, these jumps in data. Because why are we collecting this data, right? So let's get onto that. All of this data means something. And it's showing you something. Now, here's something interesting I already spotted. In this, right, of course, some of the answers are very far off. The data set is very small here. There's already one time that's shown up more than others. 6 hours. It's taken us 6 hours to deliver liquidity, usually once we've made one end of the range. The algorithm knows when the end of the range is made, by the way, right? It's pre-programmed in. Now, what does that mean? Now, let's imagine I collect this whole data for a month, even, right? 31 days. To me, that's not enough. It should be more, but let's just say it's a month. We can then build an average. And imagine our most common answer is 6 hours, right? That's appearing again and again and again. We then start to assume, okay, the probability of once the low of the day has been made and we're confident that it's the low of the day, we have roughly a 6 hour window to get into trades, get in line with it before the high of the day is made. And when you then start combining these things with the ADR, with liquidity pools, with a bit of logic, things start to become very clear because it can be like, okay, look, price is somewhere here. We have 6 hours to make it up here. Okay, cool. London kill zone just ended. We've come up to here. We've started to retrace. Now, it makes a lot of sense for New York to come down here and then up there. Hope you guys kept up with the boxes there. But I hope you get the gist of it. All this data does serve a purpose. Now, me telling you guys go back, do your back tests in those lessons, that's good. And I hope everyone done that. Now, this in itself is a form of back testing to an extent, if you're doing it on the weekend, you're looking back at the past week. But in a way, also forward testing because we're going to be using this data very actively. Another easy one, right? Very easy. Like I said, DR time, it can vary. The session. Once we have, again, a large data set, right? Let's say we fill in all of this and we have answers here. We can then say, oh, look, 70% of the time, the low of the day on a bearish day, bullish day, whatever, is made in London Open Kill Zone, whatever it is, whatever the answers will be. The answers will reveal themselves. Some little things I quickly like to touch on. AL means Asia lunch, right? I've included that because that's that window between the Asia range and London actually starting. 2 hour window. LL is London lunch, London Open Kill Zone, New York Kill Zone. AR is the Asia range itself, and the London Close Kill Zone, London Open Kill Zone, right? Now, if we, on Excel, not everyone might know how to use it. This stuff that I've set up is pretty straightforward. I'm hoping all of you can set this up. I will be nice and send you guys, this data in the bootcamp. I am not collecting this data for you. I'm not doing it for you. Every weekend, I expect you to take some time out. When you do your weekly outlook, take your time out, go over the past week, look at your calendar, include your comments and notes, and collect all this data the same way I've done. It will be very fruitful to you. Another easy, little hack here, I guess. The ADR, you can pre-calculate it here. Even when I highlight these numbers, the average down here is 119. So imagine I'm calculating the ADR for the next day. Of course, I haven't done today's ADR. But let's assume I wanted to calculate the ADR for Tuesday. I can highlight 5 days. And my average is then 133. So, I already know my expected ADR is going to be 133. Just a little hack. Now, in regards to this data, the way we can filter this, right? Where's it gone? Yeah, so if you just come over here, we can press filter. And as you guys can see, these little tick boxes pulled up next to everything. So what I can do to this, right? So, we got bearish and bullish days. What I can do to this data is just change it to one of them, right? There shouldn't be, any blanks in your data once everything is filled in. Of course, everything's not filled in for me. Now, let's say I only want to look at the bearish days. You see how we can see this data now. Okay, 3 bearish days, and in those bearish days, twice London Open Kill Zone made, the high. It was the session of the high, yeah. The same way, we can come over to the bullish, and the bullish days are going to show us something as well. London Open Kill Zone made the low of the day on the bullish days twice already, right? Cool. That's just 3 days. I've collected this data for 6 days into the year properly. Of course, there's been 6 trading days. We're on the 7th right now. What you guys want to do is collect this data consistently. The more data you collect, the more conclusions you can draw. And the longer you collect this data, the more accurate they will get, as you will work towards average figures that make, a lot more sense over time. Using this small data set to start making conclusions, to me, is very useless. We need to collect at least a few months. And doing it this way, doing it now as time goes along, is very easy versus doing it in, backtesting sense. If I tell you guys, go backtest all of 2022, that will take you a lot longer than taking out 5-10 minutes of your weekend, every weekend, and collecting these small bits of data. This shouldn't take you very long. Maybe the first time you're making your spreadsheet, setting things up, it might be a bit long, right? That's fine. I have to do it as well. But after you do it a couple times, it'll become very easy. Now, so this, bear in mind, is one spreadsheet. This is for my daily data. I've explained everything I'm looking at, right? Same way, make comments, everything. Everything here should now make sense to you guys. We can then look at the weekly data. So very similar, nothing crazy. We've got the month, we've got the week. The weekly range again, from the high to the low, how many pips we had. The weekly close, right? And my bias is bearish. The high of the week's made on a Monday. The low of the week's made on a Friday. The high, what session was it made during? London Open Kill Zone. The low, what session was it made during? The time from the high to the low, right? I've been very specific here. I understand if you guys don't want to be as specific, you can just do days and hours, whatever's fine. This data doesn't, you guys don't have to copy me exactly. It doesn't have to be like that. You can tailor this data to what you think is important. I've put in some things that I think are very easy to draw conclusions from and will aid mine and your trading in the future. You can add more things if you want to be more specific, but it also makes sense if you don't, include a few things, it's fine. And of course, the last thing I've included here is the monthly close, similar to this one where I've included a weekly close, right? And the principle is pretty much the same. It's not very hard. The weekly range, very easy to see. When you're on the weekend, you're just analyzing one candle. This time is easy to work out as well. If anything, you can use this daily data sheet to aid your weekly data sheet. This might be overkill to a few of you in it, like doing both things, but in my eyes, it is very helpful. And as you collect this data, it will serve a purpose. This data that I'm collecting is for Euro USD. Some of you may not trade Euro USD. I know a lot of people trade US 500 in here. I have a friend, he's in the group chat actually, and he's collected very similar data for US 500 for, I believe, all of 2022. So if that's the pair you're trading, collect the data for US 500. That's fine. It doesn't have to be Euro USD. I'm not telling you to do this task, as practice. Yes, it is good practice, but I'm telling you to do it because it will serve you a purpose later on. So pick the pair that you will be trading. Do more than one pair if you want to. If you trade Euro USD and US 500, do both. It's not going to take you a lot of time, honestly, if you start now, especially because we're only a few days into the year. So, do either. Any questions, even questions on should I be backtesting this, that, should I be collecting this sort of data or not, whatever, you guys can hit me up. I'll be happy to help. That is it for today's video. I'll be back with a lesson very soon.